So I'm going to take this opportunity to talk a little bit about TymeBank, and TymeBank has a model that's very much predicated on retail partnerships. Our two big retail partners are TFG and the Pick and Pay group, so Pick and Pay and Boxer. But I thought I'd first just tell you a little bit about TymeBank. So you've probably heard of us. You might have seen an advert or two. You may know that we're growing fairly quickly. But we onboarded our 7 millionth customer last week. So that's 7 million since February 2019. So just over 4 years. And that's a sort of a statistic that maybe flatters a little bit. That's how many customers have opened accounts. It's not how many use their accounts. That's the trick, is when you have a bank account that you kind of hand out for free, you have to do the sort of the razors and razor blades model. So we hand out a lot of bank cards. We've got about 80% of those customers that have done something with their account, and about 70% of them that have done something in the last 30 days with their account. So it's close to 5 million customers. I'm not going to spend lots of time. So this presentation, that we've just gone through a funding round, and we were trying to woo potential investors, and fortunately managed to attract some of it just before some of this really bad South African news, came to the fore. Just, we don't only operate in South Africa. So although the genesis of our business was South Africa, and the sort of precursors to the bank was in South Africa, we actually had a partnership with MTN where we operated their mobile money product for them about a decade ago. So iteration 2 of MTN mobile money. They're on iteration 3 now. But we actually launched a bank in the Philippines called GoTyme in September, I think, last year. And we've just surpassed 500,000 customers on that business. So we're a minority shareholder. We own 49% of the business, and our local partner is a big conglomerate in the Philippines. They own 51%. When Daniel was talking about sort of our pedestrian growth rates or non-existent growth rates, the Philippines is a little bit different. They're more double digits type stuff, 10% odd, double the population of South Africa, very young population, so average age 26 years. So we think fantastic opportunity. We've got a great partner there that owns a big retailer in the Philippines as well. So it's a similar model to the one that we've employed here. So just for the guys that don't know what TymeBank does, we do sort of banking products. Our core product is a transactional product, Visa debit card attached to it, and a savings proposition. We ventured out into some other products that banks naturally venture into over time. We've got a full banking license, so we can do lending, and that's often why one goes through all the pain of going into retail banking, is attract deposits and then find someone that you trust, that you can lend some money to, that and hope they'll give it back. I will touch on just a little bit later on sort of our adventures in buy now, pay later, but actually you've got a real expert here to talk about that properly. So I'm not even gonna. We hopefully we can do a bit of a question and answer session later, and we can compare the products. But so we've got a whole bunch of insurance partnerships. Some of it we've tried selling insurance inside of Pick and Pay and Boxer in partnership with Hollard. I know lots of the retailers here have sort of experimented with similar things. It's tough. Selling insurance to someone with a trolley full of melting ice cream is a bit of a mug's game on the collection side. We've had more success on selling insurance through our app. So we've got north of 1.5 million customers that interact with our Android app every month. Another 200,000 that use iOS, and probably 500,000 odd that use USSD. But in those sort of electronic channels, we've done quite well in terms of selling insurance products. We've got a credit card with RCS, a partnership with RCS. Greg and I were talking about a guy he now works with, a gentleman by the name of Chris DeWitt, that some of you might know. But I shook hands with Chris almost 4 years ago, so almost as the bank was launching, saying we're going to do a credit card together. And then COVID came along, and for 101 reasons, it took us a heck of a lot longer to get our credit card out the gates than what we'd hoped. We've dabbled in unsecured personal loans pre-COVID, and now we've finally started again. I'll just cover the other two. So we've got a Time Advance, which is the earned wage access product. If you're not familiar with these products, basically it allows a staff member to access part of the salary that they've already earned up to that point in the month. And because we're not taking counterparty risk on the individual, The corporates promise to pay us, lop off some of the, or the portion of the salary that's been extended at the end of the month. Because of that, we can do it at a very low cost. We basically charge a click fee for you to access part of your salary. It's sort of a product that I'm keen to sell to you guys, but a product that solves potentially two problems for consumers. Someone has a financial shock, they drive through a pothole and destroy a tire. The guy at the Super Quick tells them that they should actually match their tires and replace two tires, and the customer typically goes, I don't have the money. So this product lets you very, very inexpensively access some of your salary. The other sort of scenario where this thing is useful is it actually just income smooths. So in the States it's quite common for salaries to be paid bi-weekly. People tend to be sort of more responsible and more disciplined if you trickle feed them their salary. They match their spending to their means better than if it's big chunks. In which case it often disappears. More time is our buy now, pay later product. I'll swing around to that right at the end of the story. But but basically our two big partners are TFG and Pick n Pay for this product. We've ventured into other physical retailers. We've also sort of experimented. I'm sort of going to be quite modest because our achievements have been quite modest in the space. The growth has been fantastic inside of TFG and Pick n Pay, somewhat less so in the online space. These guys, Pay Just Now and PayFlex, were sort of out the gates long before us and forged relationships with some of the big retailers, especially in the online space, so Takealot and Superbalist. It's a tough game. These products are a novel way, though, for consumers to access credit and potentially for retailers to boost basket sizes and increase sales. The last one on this is the one that's grey, so Merchant Advance. We fairly recently finalized our deal with Retail Capital. So Retail Capital is a big merchant advance business, so they advance credits against turnover, typically through a card acquiring device. So they use the data that the merchant is able to provide around their sales to be able to extend credit. And then the repayments for that credit, the mechanism for achieving the repayments typically is that a slice of the turnover that goes through the device gets lopped off and used to repay, which the upside of a product of that nature is that the repayments are indexed to turnover. It reduces the chance that a merchant's going to be subjected to real financial stress because they have a rough month or there's load shedding for 3 months of the year. This is our model. Typically, about 80% of our sales to date have occurred through the kiosk. This is sort of a fancy-looking kiosk. The ones in Pick n Pay and Boxer are now almost 4 years or 5 years old. They were an Android tablet in a box with a fingerprint reader and some electronics and a card issuing device. But basically, the essence of what the thing does has not changed. The level of sophistication of the kiosk has. We literally have a 5-minute process. You wander up to the kiosk with no paperwork. You put your fingerprint down. You type in your ID. And 5 minutes later, it spits out a card with your name on it. And you have an active bank account. So I urge anyone who hasn't tried this yet to give it a bash. About 20% of our customers come through our digital channels, so through the web. Greg tried it and succeeded in getting a card. The other channel is the app, and we use facial recognition. In both of these cases, we go and check against the Home Affairs Harness database, where that houses the fingerprint data, and for facial recognition, we go compare sort of the face in front of the phone to the more recent of either your ID or your passport photograph. So that lets us fairly robust or very robustly onboard a customer, verify that they are who they say they are, get a card into their hand and give them an active bank account. So it's a model that, that sort of the numbers speak for themselves. The 7 million is good, we think, but we're on track to break even in terms of costs versus revenue by later this year. So it's been a long and arduous journey, but it's a model that seems to be working, and I hope you guys will invite me back one of these days where we can sort of celebrate that we're actually profitable. Just sort of where do we operate? We operate sort of 4 main segments. The SME one is sort of more recent, but so value, Boxer, SARSA, ZCM. Daniel pointed out the extent to which the South African population is dependent on grants. For us, it's an opportunity. So our cost model is so low that we can actually create a profitable relationship even with a SARSA grant recipient. The sort of disability, old age, and child support grant recipients are get more income than the SRD grant recipients, but all of them were able to bank profitably. It's a stretch on the SRD side, but we also have a partnership with the ZCC, so the biggest church in the country. We have about 200 kiosks in their environment, so we've got about 600 in Pick and Pay Boxer, about 600 inside of TFG, and another 200 odd inside the ZCC. That thing's been a bit of a stop-start relationship because of COVID. The guys are incredibly careful. It's a very conservative community, and they've been very responsible, and now maybe being sort of overly cautious in terms of opening up the church environments again. The 41% lifestyle, so that's Pick and Pay and more recently TFG, and then 27% what we call cyber, but it's customers that typically we've originated through our digital channels rather than through the kiosk. And then a tiny sliver is SME, but we're hoping to grow that. The retail capital acquisition was a big driver. It gave us something useful to do with our deposits book, other than sort of invested in treasury bills and government bonds. About half of that book is now invested in funding the merchant advance product. This slide is all about merchant advance. I'm not going to linger on it for too long, but there are a set of key partnerships there that we're hoping to grow and leverage over time. So the retail capital model, they go direct to some merchants, to larger merchants. These are typically sort of not of the businesses that are represented by the people in this room, but they may be your clients. So these merchants may be buying from you and then on-selling. So our direct model there is a bit higher touch, higher cost, but we also have sort of white-labeled models through iCoca, through Yoko, and others, where we fund the book, we do the scoring, but we're sort of in the background behind their brand. So they maintain their sort of direct relationship with the customer. So this stuff is all very data, sort of the crux of this model, why it's a good sort of good match for our model is we really try and leverage data in the consumer lending space, in the sort of risk assessment space, even for insurance products. We've employed lots and lots of sort of actuaries and propeller heads to leverage data and try and partner with partners that have big pools of data. So Pick and Pay with their Smart Shopper program, TFG with their store card, with their own loyalty program. The same things happened with retail capital and the business that we operate in the Philippines. So we've grown faster. This is a little bit of a good South African graph. Finally, you see, I outdid you, Daniel. You probably haven't heard of many of these things, but there's Nubank, there's Revolut, there's N26, and Monzo. They're all sort of the poster children of digital banking. Neobanks is what the guys call these things, success stories. And we've managed to grow much faster than all of them. South Africa is actually a highly banked, on a global stage. There isn't a sort of a dearth of entities offering financial services products. So, we're quite proud of what we've managed to achieve in terms of the number of customers that we've onboarded in a short space of time. We've introduced lots of new functionality and features over time. The policy has been going quickly and with a simple offering and then rounded out as we go along. Our offering's been too simple for some more sophisticated customers. They may have opened their accounts and now we have to woo them back and say, try us again, because, for example, now your card can work when you go overseas, or we a couple of months away from launching virtual card. You be able to tap your phone or tap your watch and be able to make a purchase that way. So lots of innovation along the way, but lots of work still to do. This is the last slide I've got. This is our actuary that created this thing. It looks like, like a firefly graph. What that is a whole bunch of different cohorts of customers. That's quarterly cohorts and the number of transactions that they perform over time. And basically what it means, I'm going to actually point to the graph, is these guys were the guys we onboarded first. So they've been on book for the longest. And this is the number of transactions that they perform per month. And basically what this thing shows is the longer that you've been on book, the more you tend to use your account, which is a function, both of us, entrenching our relationship with the customer and adding stuff that they can do. So we've added more and more value-added services products. You can't just buy airtime. You can buy data. You can buy electricity. You can buy gaming vouchers. There's more and more that you can do. The graph on the right is on average how many different unique things does a customer do with us. That's a count of how many things the customer does. Maybe it sounds like a semantic difference, but this means that, for example, a customer does an EFT and they purchase airtime and do a cash withdrawal and they do a send money transaction where they pay someone who's dependent on them. That's a count of how many of those things they've done in total. This graph just shows that if we can onboard someone, if we can hold on to that relationship with them, over time and nurture it, over time it grows and grows. And hopefully the thing will keep going up towards the top right over time. So now I can sort of like just quickly dive into sort of stuff that retailers are maybe more interested in. The buy now, pay later stuff. Our offering in the buy now, pay later space, we were sort of Johnny come lately. And we launched at a time when the share prices of these buy now, pay later businesses on a global scale were really impressive, and they've pulled back dramatically over time. But the concept, I think, we still believe is a good one. So what is the concept? The concept is that you extend a credit facilities to someone and you give them a period over which to pay it off. We all the three sort of, I'll call us one of the big three players in the country, but the structure of that facility is different in each case. What we've tried to do is say you've got effectively you earn a salary this month, next month, and the following one, and you can take a bit of that salary and pay for this thing that you're wanting to buy with each of those 3 salary payments. Payflex is in the room, so I can diss them a little bit. They do it after 2 weeks, 4 weeks, and 6 weeks, so it's only over 2 salary payments. So that doesn't solve exactly the same problem. You guys have fiddled with your model a bit, but it's more similar to ours than to Payflex's. I'll let him do the talking, the other Greg. The customers that we've focused on, though, are perhaps different from the other guys. So we're looking to bank customers. So our reason for existing is to try and bank as many South Africans as possible. And we see the buy now, pay later product as a means to that end rather than an end in itself. It is also a way for us to allow someone to develop a credit footprint, some sort of reputation against which we can do other lending products. So lots of our customers have no bureau footprints at all, or not a particularly good one. This product can help either create that footprint or rehabilitate that footprint. It can extend very small amounts of credit. It's the repayment cycle is quite quick, so you can quite quickly learn about your customer and whether they can be trusted with more money. For the retailer, you're getting, if I was standing here telling you the story about credit cards, it would be a similar one. You hopefully are getting customers that are able to leverage someone else's balance sheet briefly to fund their purchases, and that means that they make purchases that they otherwise wouldn't have made, or they buy more or whatever. Because we've sort of pitched at a market segment that typically wouldn't have credit cards, it means that there isn't, I think, a huge overlap between our customer base that's using buy now, pay later, and the customer base of Payflex and Pay Just Now. I keep thinking Pay Me Now because they're our competitors in the salary advance space. Brian Habana and his crew. So this thing, we think there's a part of the market that if you introduce them to a little bit of credit, it's good for them. It lets them, buy stuff that they need now, without incurring big credit costs. The sort of stick on this product is if you don't make the payments, that there's a penalty. We make very little money out of the penalty side of this. That's not true of these guys. And the reason is actually, I'm going to be very honest, is that once someone's gone bad, the likelihood of us getting money out of them is incredibly low, and the cost to pursue them makes it not worthwhile. So although we wave the stick, we don't actually use it very much. So basically this thing for us is about attracting new customers and about sort of getting them onto the credit ladder, and working with our retail partners. So TFG has been a great supporter of this thing. They've helped us market it and helped us create a brand around it. We're hoping to take it to new heights in that environment, but also happy to talk to anyone here that wants to give it a go. Even if you already have these guys in the store, I think they're fairly complementary. I think the overlap between our customer bases isn't huge. That's it from me. I think we're probably going to go through everyone, and then we can ask questions or throw comments at me or whatever. But thank you for your time, everyone.